All right, good morning, everybody. It is 30 minutes after the opening bell. It is 10 a.m. Eastern time here in the East Coast. Today is November 10th, 2022. Today is Thursday. Okay, so guess what? We just had CPI come out. We are having a little bit of a rally today. All right, so let's just break down what's really going on. So here's the CPI report, okay, straight from the US Bureau of Labor Statistics. All right. So so here it is. So it was the headline number was 7.7, core was 6.3. It was a softer number than expected. All right. So no surprise, guys. All right. Actually, back in June 21st, we actually already started talking about this. I said at the end of the year, around the end of the year, we might see a soft print, and we were using TIP TLT at the time. Go back, look at our June 21st high noon highlights. It's all there. Okay, so we talked about this. We were 5 or 6 months ahead on this, and we suspected that around the end of the year we would see some soft numbers. So there you go, guys. Checkmate trading. We're strategic. We give it to you guys before the masses. Okay, so we saw this coming. I saw all the numbers. It looks like there's certain things that went up. Actually, commodity prices actually went up in this reading, but a lot of the services like healthcare services and utility gas services, those things came down. Vehicle prices, new vehicles, used vehicles. I actually think that maybe not the next one, but the one after, the one that's reported in January, February, that might come in even much lower than this. Okay, just based on the data and just based on the history behind the TIP TLT, also just basic commodity prices. So again, this one was the first soft one. I think is going to get softer and softer, and then we're going to see a much bigger than expected drop around January, February. Okay, so I think it's going to keep going down. After that, I have no idea. Okay, so it's anybody's guess after that. But that's just what the data is telling us. So again, there should be no surprises, and I did change some of our positioning because of this. UUUU, remember how we were in the November covered calls? I'm no longer in those November covered calls. Yesterday on the Discord, I sent you guys alerts at the end of the day. I rolled my 7 calls into the December 8 calls. Okay, so they're still covered calls. I rolled them actually for about a 2-cent credit. So I even got a credit. I even got paid to roll this. And it's a good thing that I did because I rolled into something that was lower delta. So even though UUUU is up on this pop, hey, I'm fine. I'm looking quite nice. Instead of being, instead of being in this one, I'd be in like 45 to 60. This one is more. It's around the same, 35, 45, so it's not as big of a pop. And also, it gives me a little bit more time. Also, if it just keeps running, hey, at least I can take that extra $1 off of my shares getting called away. So win-win all around. I did prepare for this. I thought, if the numbers come out soft, everything's just going to run up, and everything did run up, okay? What did I tell you guys? Dollar coming down, British pound going up, euro going up. Let's just take a look at all of that. Let's pull out our handy dandy charts. Okay, so the dollar is down. Okay, the dollar is coming way down because of this report. So now, there is, I'm sure now the market is suspecting that we might see the Fed pause a little bit, whatever you want to call it. People don't like the word pivot. Okay, everybody thinks that when you say the word pivot, you're talking about a rate cut. I'm not talking about a rate cut, but they might slow down the pace at which they are raising rates, which I consider that a pivot. Okay, it doesn't have to be a rate cut. It could be a pause. It could be just slowing down the rate of the rate hikes. It could even be some type of yield curve control or foreign bond buying, whatever it may be. But I think that's going to happen sometime in the next couple of months. We don't have a Fed meeting until next month, so we'll see what happens. All right. Already too. We were going to look at the currencies. Where is my currency charts? It's a dollar index coming way down today. Today it is down 1.57%. I told you guys, euro, British pound, Japanese yen. That's what you want to look for right now. The British pound is up 2.5%. All right, euro is up 1.4%. Japanese yen is up 3% today. Okay, so a lot of money in those dollar-denominated foreign accounts are going to come out. They're going to get into risk assets. All right. So prepare yourself. Okay. I told you, low liquidity markets, the counter trend movement can be especially vicious. Okay. It can be especially vicious. So I told you guys this. That's why we were patient. Okay. I did. There are some other trades that did go off because of this. The Euro Stoxx index and the DAX are going up. What did I say? Remember this level, 38.16 or so? I said this would be a very good place to short the euro. And guess what I did today at the opening bell? So that you guys know that I'm not BSing you guys. I opened up the February 36.31 debit put vertical spreads. All right, I got them filled at 115, around 115. Max profit is about 385 or so. So it gives me a little bit more than 3-to-1 reward to risk, and it gives me 100 days. Okay, so we'll see what happens. Already, it's moving up a little bit past that. Because this is dollar denominated, when the dollar comes down, we can see an overperformance of this compared to if you were just to lay FEZ right over the Euro Stoxx Index futures, which is priced in euros. You're gonna see a little bit of a difference because of the currency conversion. Okay, so because of that, I'm also, that's why I chose to do a little bit longer dated. I only did a starter position. This could still go up a little bit more because of that, because of the dollar coming down or whatever. And if that's the case, I don't want to be, I don't want to be taking on too large of a position. So again, I just started a starter position for now. Okay, a starter position. So we'll see what happens. And I'll keep adding to that. If our data remains the same, our liquidity data, everything remains the same, I will keep doing so. Okay, so we're now at the point where we're starting to accumulate negative delta on risk assets. Let me say that again. We are at the point now, okay, where we are now accumulating slowly some negative delta on this pop. Okay. That's why I'm going up about 100 days or so. Okay, this could be a while, all right. But we were patient. We were patient for our levels. Let's exercise just a little bit more. Okay, a little bit more patience. All right. What else? Let's talk about U.S. indices. Okay, so U.S. indices right now, we're marching higher. Okay, look at that. I'm still waiting for this 41.25 zone, 41.25. I will buy QQQ. Actually, you know what? From this morning, I did not check our indicators. Let's go ahead and check our indicators. IVW, IVE, popping up. Okay. Will this be, all right, a lower high opportunity for IVW, IVE? I do think so. If you're going to play this bear market rally, if you believe this bear market rally has more legs, I do think that maybe in this bear market rally, we might see actually tech overperform if this goes up. If this keeps going up like this for a couple of days, maybe. Okay. I'm not going to buy any tech stocks. I'm not going long anything like that right now. SPX long-term trend still down. Okay. We're still in a bear market. All right. This is just merely a bear market rally. Okay. We'll see how long this one lasts. I do think that even though we go up to around like 41.25 or so, I do think that we get smacked right back down again. at that point. Once we get to about 41.25, I do think we're going back down though. All right, 41.25. 41.25, again, I'm going to buy QQQ puts as long as our IVE chart is still in a downtrend. As long as this is still in a downtrend, I am going to short the market using QQQ. All right, we're not there yet. Okay, let's give it a couple more days and let's see what happens. And then if it doesn't get there, well, so be it. Okay, if it doesn't get to 41.25 and just sells off before then, I mean, I'm okay with that. I'll sell, you know, at the money SPY puts 30 days out when VIX gets to 32. So either way, I have a plan. I'm just going to stick with my plan. Okay, so nothing has changed. We're sticking to the plan now. Instead of just being plans, now we're starting to execute on them because now we're at our levels. All right. So now it's, you know, I'm sure a lot of people got wiped out. A lot of people, especially on, if you looked at, oh, wow, look at this. Oh, wow. Well, anyway, what I was saying was on Twitter, a lot of people were just position short for the CPI. Everybody thought, oh, after the CPI, it's going to go down. A lot of people are getting wiped out right now, okay? Lots of people are getting wiped out. ETH, wow, you know what? I remember how I got stopped out, like, where was I? Where did I step out? I got stopped out here, 11. It was break even, but still, I got stopped out at 11.39, right around here. Oh my goodness, look at that. What a recovery. What a recovery in crypto. My goodness. I just noticed that this is incredible. This is incredible. Actually, one of our members actually showed us the BZ, thank you, you know, for sending this as always. He keeps sending us the delta neutral zones, and right now the delta neutral zone, the delta negative zones and the delta positive zones. Right now the delta positives, there's a lot of delta positives around the highs right before the sell-off. So around 21,000, and here also too around 16,000. So because of that positive gamma dealer exposure, I'm guessing that a lot of people sold some premium right before this sold off. We saw OI numbers come down. Probably those people that sold those calls, they probably covered short. You know, and once they covered, you know, I did notice that the open interest on Ethereum came back. Now, you know, it went down. It was at 7, right? It was at 7 billion. It went down to 5. Now it's at 6.2. Okay, it's at 6.2 right now. So, you know, a lot of options got wiped out or closed. And then, you know, I think right now we're just waiting for the options volume to come back. And I think that might cause Ethereum to go up. Also, too, with with this FTX situation. So Sam Bankman is going to start. He's going to get investigated by the CFTC. Okay, and the CFTC, that's the futures trading regulatory body here in the United States. That's no joke, all right? The SEC investigation is one thing, but a CFTC investigation is quite nasty. That's like the equivalent of the feds coming in, all right? So the CFTC now is investigating FTX. That could have some repercussions. We might see a lot of altcoins possibly get restricted or banned. Okay, I think that's definitely a possibility. Okay, so if you guys are in altcoins and things like that, you might just want to consider. And here's the thing: I think that is actually a bullish case for Ethereum. I think if they start restricting altcoins, you might see a lot of people. A lot of the money that's in crypto may end up getting concentrated into ETH. So people in all these different altcoins may end up getting rid of it and then putting all that money into ETH. So that might be a really bullish case for Ethereum, actually. Not so much for crypto as a whole, but bullish on Ethereum. And I think that's the case. And that's kind of based on, you know, just my understanding of the initial investigation that the CFTC is doing on Sam Bankman and FTX. They might crack down hard on this altcoin market. We shall see. Okay. And again, if they do that, I don't think that's a good thing for the crypto market as a whole, but I think a lot of that money in altcoins is going to end up in Ethereum, because I don't think they're going to crack down on Ethereum as much, because Ethereum actually does have some good use cases. All right. Some of these altcoins don't. All right. And well, actually most of them don't. I would say almost all of them don't. Okay. But Ethereum, I think they'll keep. Okay. So that's crypto. Let's look at our indicators again. I mean, before I got into crypto, I was looking at our indicators. So Junk Bonds ADL. I've got some questions actually about the Junk Bonds ADL. So what is our Junk Bonds ADL? Why do we even track this? So junk bond market is the most riskiest and junkiest part of the bond market. That is where it's the most speculative part of the bond market. So that is usually when we see the risk on appetite come through. Bond markets are just way bigger than stock markets. And so whenever we start seeing money pouring into junk bonds, we tend to see this risk on environment elsewhere. You know, we start seeing it in stocks, we start seeing it in crypto, we start seeing it in other risk on assets. Okay, and the ADL, so I call this the Junk Bond ADL, the Junk Bonds Advanced Decline. It's the same thing. ADL stands for Advanced Decline Line. So when you calculate an Advanced Decline Line, you count how many advances there were in the market. So, you know, let's say, I don't know, let's say 10,000 different issues get traded on the junk bond market. You know, if it's 6,000 went up and advanced and 4,000 went down, well, in that case, the advanced decline for that day would be the advances minus declines. 6,000 minus 4,000 equals 2,000. Okay, and then you add that to the previous day's number, and that's how you get a line. Okay, that's what our Junk Bonds ADL is. All right, and that's what we've been doing. We've been tracking this since we started Checkmate trading. All right. This has been a pretty good indicator. It's a lie detector. Basically, you know, when we see pops in the market, is it likely to sustain? Okay, that's what this tells us. If it's trending up, it means that liquidity is increasing. So these bear market rallies could have some legs. It might last a little bit more. We saw that back here. Remember in June. In July, remember after July 4th, we saw 4 days in a row and we kept seeing it going up. And remember, we had that huge rally after those earnings reports came out. We had that rally all the way till about mid-August or so. Same thing in end of May. In end of May, we saw 4 days in a row of advances on our Junk Bonds ADL, and we saw that bear market rally in the S&P 500. The S&P 500 is this orange line. Junk Bonds ADL is the blue line. Okay, and I post this every night in our Discord. Another incentive for you to join our Discord. It's all free, no paywalls. Okay, I do this, you know, for the love, for the education of it. All right, so you know, I post this, so you know, you're welcome to join and look at it whenever I post. So anyway. These all started these rallies right here too. We saw 4 days in a row, and we said, okay, this is a real rally. We got long here. Remember, we got long in our Baidu calls right here. Boom, there we go. We went up. Same thing. We've had 4 days in a row. And October 26th, that was our 4th day in a row of advances over declines. Usually when we see 4 days in a row like that, this advanced decline line starts sustaining an upward move. And generally when that happens, that means this rally's got legs to it. All right. So it's a good lie detector for risk assets. Okay. And we've been using it very well for that. It's worked extremely well this year. It's actually helped us avoid large losses. Okay. So those of you who have followed this and tracked this with me, you guys have been very patient waiting for this. And so we've been waiting for this signal. And we saw that this rally could have legs. So we stopped buying puts, and we stopped, getting all short and everything. And so that patience has definitely paid off. All right. As far as our other indicators are concerned, our New York high-low line. All right. Yesterday, it did get a little bit more down, but although today, I do think it is a little bit up. Yes, it's up today. It's positive today. We haven't seen a positive close on the New York high-low line for a while, actually. We saw one in October, and then before that we saw it in August. But it's been very uncommon to see days with positive highs minus lows. And New York Stock Exchange high low line, what it is it just takes all the stocks in the New York Stock Exchange, which ones are making 52-week highs, which ones are making 52-week lows, and you subtract the two numbers. You take that number, you add it to the number of the day before, and it creates a line. All right. When we start seeing the stocks in the New York Stock Exchange, there's more highs being made than lows. That's when we know that liquidity is also entering the market. So when we see this line curve up, also at the same time, we see the Junk Bonds ADL make a higher high, higher low. The combination of those two creates the MOAB, what I call the MOAB, the mother of all buy the dip signals. Okay, so that's where my big money is waiting for. I'm waiting for that moment, because that moment is where we make a lot of money. Fortunes get made during those moments. Okay, so that's why I've been extremely patient. I don't want to lose money and lose my capital and my mental preparedness for that event, because when that event comes, and I don't know when it's going to happen, it could be weeks from now, months from now, maybe even years from now. But when it does happen, it will be a monster opportunity, okay? And so that's what really my biggest trade that I'm waiting for. That's it, okay? But it requires a lot of patience, all right? So I just wanted to go over that because I got some questions on that earlier, okay? What else am I looking at? Well, for the most part, that's about all I had prepared. Mostly today, I wanted to go over those indicators and the CPI report. Again, the CPI report came out softer than expected, so we are seeing a rally in this market, a pretty good one actually. We did get into our FEZ put spreads. So again, our FEZ February put spreads 36.31. So I'm starting to now accumulate negative delta. Oh, another play that we've been looking at, Turkey. I've been saying this since the summer. I think Turkey's going to be a great short. Turkey, they have just record inflation, and they're still cutting interest rates because I have no idea why. It's mayhem over there. So at some point this is going to implode on itself, and although right now with the dollar coming down, this could have some legs and go up a little bit. So that's why I've been saying be patient on this. I'm going to wait till tomorrow and see what happens. Although right now it is going up. Right now it's there like after hours. So we'll see what the reaction in their market time is. I do think that there is a possibility we could get to like around, we could get to around here, 33 to 37. That's a pretty big range, I know, but look at the moves that this has been doing. These are like 10, 20% moves in a matter of a couple months. These are some huge moves, all right? In a couple weeks, just, like 10, 20% in a couple weeks. So it's very, it's possible. It could get to 33, 37. And if that's the case, that is like, I will short with size here. But at this level, I don't know. Okay. I'm going to wait and see. Okay. And I'll let you guys know in the Discord whenever I enter that trade. But I am looking, this is my next one that I'm looking to short is Turkey. All right. How's Meta doing? Meta up 5%. Yeah. Once it gets around here, that 137, 150 zone, right in this band, I'm going to short Meta. It is a large band. It's just because the volatility is so high. I believe the implied volatility right now is what? 54%. Yeah, 54, 55%. So that's like what? Just rule of 16, which is a very easy way of estimating the daily expected move based on options prices. At implied volatility 55, you divide by 16, that's like 4, right? No, 3 point something. So about 3.5, let's say. So a 3.5% move per day for the next 30 days, or no, not next 30 days, but 3.5% daily moves is expected out of this. So from 137 to 150, that's like 3 or 4%. That's just a day's move. Okay, that's just a day's move right there. So from 137 to 150, that is like an expected day's move. And that is where I will short Meta. Meta is a great candidate to short. I think Meta is going to be a next mid-cap stock candidate with all the cash burn that they're doing. So I'm ready. I'm ready to short Meta. That's going to be another play. Shorting Meta at 137, 150 zone right here. Okay, so I have my alert set. Another good short target, and one of our members actually brought this up to my attention, Carvana. Oh my God, what a trash company, okay? This thing is just bleeding money like no other, all right? Today it's up almost 30%. Good. All the gamblers are probably getting wiped out, all the put gamblers. I am considering buying some longer dated puts. I kind of like the June 2023 2.5 puts. They're low delta though. They are quite low delta. So, maybe 5 puts. I'm not sure, but I'd even just lotto on the 2.5 puts, 55 or so. Okay, let's see where it goes. You could shoot up just a little bit more today, so we'll see. I might actually enter that at the end of the day. I'll let you guys know. But right now, I'm leaning toward that May 2023 2.5 puts. We'll see. Okay, so those are some plays coming up. What else? How's Hut doing? Hut up. Okay, very good. And then UUUU, just a final check. Oh, you know what? Gold. I bet you gold right now is probably on fire. Oh, yes, it is. Oh, my goodness. We missed out. We totally missed out on the gold miners. I knew it. I just knew it. I had my alert set here at 22.50, and it missed it by 8 cents. So it is what it is. All right. Gold miners are going crazy. One of our gold stocks we were looking at, Barrick Gold, is gapping up. Barrick Gold is gapping up. Some of the other gold names I'm looking at, Centerra Gold, oh, gapping up. Of course. How is... no, what is it? CGAU. Not that much options activity on that. Okay, well, and then there's AG. I was also gonna take a look at AG. Oh wow, AG's up 7% today. Of course, since I'm not in it. SIL, silver miners, gapping up. Yeah. So we were trying to get into precious metals. Next big pullback, I'm getting in. I'm gonna get in on this. I do think we're getting to the next commodity super cycle within the next couple of months. I do want to get involved in that. Okay, I want to get involved. So that's why I'm going to try to get some precious metal plays if this pulls back. Silver miners, gold miners. That's what I'm looking at right now. Okay. And that's all I had. Anything else you guys want to look at today? I see a lot of you are joining us live on YouTube. So that might be a little bit of a delay between them and all right, then in that case, I don't see any questions. Then we'll go ahead and call it a day. So that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. Okay, we'll be back next week, Tuesday, Wednesday, Thursday, 10 a.m. Eastern time, 30 minutes after the opening bell of the New York Stock Exchange. I will post a few more videos tomorrow and the next couple of days, so stay tuned for that, and I'll see you guys later. Trade safe.